Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So situation on the gold market still stands, well, a bit blur. It's just because market keeps chances for the both directions. So despite we've got the volatility recently on the statement of the Jerome Powell, if you have watched it, you probably heard that he said there's a 50 basis point rate change stands on the table. It definitely will be discussed in a meeting in the beginning of the May. So that has initially, as emotional impact, has pushed gold slightly lower. It's just lead to the fluctuation with the same lows, but then market actually returns right back up. And despite that, we have on interest rates, it has jumped back to the 294, 93 area. Dollar index also has reversed and suggesting further upward continuation. Gold market shows no additional bearish signs. So it just confirms that it shows the good resistance to external headwinds, which is definitely stands as a point in favor of the bulls. Currently, at this position where market stands right now, it is unclear who will win, so either bulls or bears, just because market keeps well at both setups. So if we'll take a look, for instance, on the fall time frame chart, it still stands above the major support area. So 1930, 1946, it's two Fib levels, 618 Fib levels, that actually works like the signal area. So the breaking it down, it mostly we could suggest that it will be continuation and maybe some kind of the ABCD pattern will be completed, or at least market retest this confluence and complete the COP, at least mine the target of this pattern. But while market stands above it and grabber is still actually valid, bulls also have chance to succeed with the possible upward reversal, and it makes very difficult to make the decision. So in such circumstances, if you're not very aggressive trader, you're conservative, I would suggest that it would be better just do nothing and see what will happen. If you still would like to take the part in the possible breakouts and direction choosing process, bulls still have a relatively clear setup. We have the support area, we have Fib levels, we have the pattern. So with the placing stop somewhere below this support area, you could try to keep the long position in the hope that market will reestablish upward action. So still bulls will win. For the bears, it's a bit more difficult situation, as I said, just because, yes, although our suggestion that market could show start downward action brings us some tactical success, I mean for the bears, indeed market was made an attempt some move lower, but currently it's considered playing back. So from that standpoint, in the short-term perspective, the bearish important level is 1960-1964 confluence. So with the stops above this area, you theoretically could try to make some short positions, because out from this area probably should be some reaction that lets you to control your risk, minimize your risk, and close at the pullback if you would like to. But to be honest, guys, currently, as on the bullish side, except maybe the grabber that we have on the daily chart, as on the bearish side, we do not have clear patterns that we could say definitely, yes, market is preparing to go lower, market preparing to go higher. So we see this sideways consolidation. We have some divergences or something of that sort. This is great, but market shows relatively slow and choppy action, stands in the channel. It doesn't show currently strong reaction, and this just brings some uncertainty in the process. Indirectly, yes, it seems that some gradual support exists by buying of the physical gold. I suppose this is probably the activity of the hedgers and the hedge funds who are just accumulating the gold, because that explains why market in general resists well to the negative factors, and that demand for the gold stands on more or less significant level. But this is gradual investing and accumulation, and that's why it doesn't push price strongly higher. It just provides support and doesn't let market to drop significantly. Well, and it doesn't let us to use it as a background for in the context to suggest that this will be some explosive rally on the gold market. So from that standpoint, actually, you could act as we just said. If you are not sure and you do not see something really interesting, it would be better to wait. If you're active trader and still would like to make an attempt, as I said, on the bullish side, you could rely on the grabber and hide stops below the support area of 1940, 1930. If you have the bearish view and suggest the market should keep dropping, because in general we have not bad thrusting action here, and on the daily chart as well for strong sell-off. Overall environment with the rising United States dollar also provides some pressure on the gold. You could try to use this confidence resistance. So, but this is just the levels where you could act because we do not have the clear pattern. So this is a bit not very definite situation on the gold, and you will have to decide whether to wait or to act accordingly as we just described.